conclusion number 2. Understand your real biggest losers. That is conclusion number 2. We're going to reflect a little bit on losing. I want to share with you my 10 worst stock picks in Motley Fool Stock Advisor history. So people who take pleasure in others' damage, people who love schadenfreude or enjoy the explosions that they get to see, things blowing up in action movies, get ready because I'm about to please you. Here are the 10 worst stock picks I've ever made in Motley Fool Stock Advisor history. Really quickly, 10th worst ever, FireEye, down 68%. That is an active, ongoing recommendation today. 9th worst, Electronic Arts. Somehow I took a great company, which is what Electronic Arts is, and I completely mistimed my buy in June of 2005 and my sell in December of 2010 and lost 72%. Atwood Oceanics, down 74%. The Container Store Group, which I recommended and then re-recommended, and I'm really sorry about that, because over the 3 years from 2013 to 2016, the Container Store lost respectively 83.5% and 86.6%. So yes, those were my 6th and 7th biggest losers. My 5th biggest loser was Westport Fuel Systems. Today, WPRT, the ticker symbol, down 88%. By the way, every one of these is horrific on its own. I mean, any one of these, many investors live in fear of that ever happening in your portfolio, to lose 70% or more. But unfortunately, my fellow fools, it gets even worse because Clean Energy Fuels, which remains an active pick today for Motley Fool Stock Advisor members on my side, is down 88.7%. And slightly worse than that, my 3rd worst pick ever, Krispy Kreme Doughnuts. Somehow, I managed to take a fine American brand and a product that I personally enjoy, and I managed, and I apologize for all of these, I managed to have my stock advisor followers buy it in August of 2003, and then we sold it in October of 2005. About 2 years later, we lost 89.7%. There was some fraud going on back then, which I don't have time to talk about now, but that's part of the reason Krispy Kreme did so badly. My 2 worst picks of all time, Seadrill, down 92.7% from February 2012 to October of 2016. You're noticing many of these we didn't hold for 15 or 11 years. You're seeing me hold these for 3 or 4 years and then just giving up, sometimes doing well to do so and others not so much. And then my worst pick ever, Satyam Computer Systems, another fraud, I'm sorry to say, the India-based software developer, outsourcing to many of the Fortune 500 at the time. Unfortunately, that company was a fraud and lost 94% of its value from just May 2007 to January 2009. So that's the really bad news. Those are my 10 worst picks. I've had a lot of other losers too, but I like to share with you me at my very worst for 2 reasons. The first is, how often do you see anybody do this on CNBC or in the Wall Street Journal or in Barron's? Rarely do I see professionals who are talking about how badly they've screwed up. So we've always said at the Motley Fool, I'm not the only one, this is just me as one of many fools, that we like to lead with our bad picks. Lead with your loser. Always share a loser. Make sure you're sharing a lesson. So it is my pleasure, my horrific pleasure, to share that list of 10 stocks with you. But conclusion number 2 was entitled, Understand Your Real Biggest Losers. And here's an important point, because if you do the math, my real biggest loser I haven't even mentioned yet. If you imagine $1,000 or $10,000 being put in each of these, let's just go with $10,000. Well, if it loses 90%, how much are you left with? The answer is you're left with about $1,000. From $10,000, you're down to $1,000. You lost $9,000. But the real biggest loser for you, if you're an investor, if you've been acting over the long term, I bet you realize that it's not the bad performing stocks. It's the mega winners that you sold too early. It's that you didn't stick with big winners, and I'm going to share the math with you to make it obvious in a second. Because my real biggest loser was a company called ARM Holdings. The ticker symbol was ARMH. This is a British-based company that did R&D for the chip industry. So a lot of semiconductor companies would use their research in order to design better, faster, cheaper chips. ARM Holdings, history will show, I recommended in October of 2003, so 15 years ago this month at 5. I then re-recommended it 2 months later when it had crossed 6. That was in December of 2003. Well, fast forward to June of 2009. So almost 6 years later, the stock was languishing. It was at a dividend-adjusted closing price when I sold it of $5.38. So I'd paid $5 for it 6 years before. I then added some at 6, and I'm sitting there. 2009 was not a good time. I was probably really sad at the time about how badly the stock market had done. I looked at ARM Holdings, a double recommendation for me, and it was at $5.38. And I said to all my stock advisor followers, listeners, and members, let's sell. We're out. Here's why ARM Holdings is my real biggest loser, because when the company finally got bought out in September of 2016, the share price that day was at $67.77. So two different positions from 5 and 6 would both have been 11 plus baggers. And if you do the math on a $10,000 investment, you'll see very quickly that I passed up literally hundreds of thousands of dollars in that one mistake. And my worst pick ever, Satyam, from a $10,000 start, we lost about $9,500. So you can see it's not even close what your real biggest loser is. If you ever have had a wonderful winner in your portfolio and you sold it too early, that is by far a more criminal act on your portfolio. You're doing far more abusive damage to your own financial future than if you pick a really bad stock and watch it lose most of its value. Conclusion number 2, understand your real biggest losers.